What's up, everybody? Welcome to the Stocks channel. My name is Corey, and then today in the stock market we saw the S&P 500 closing at a brand new all-time high. We closed higher across the board in all of the indices, and we continue to see a low volume melt up in this market with absolutely no sellers anywhere to be found. What should you expect going into tomorrow and next week? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the S&P 500 SPY ETF, we went up 0.47% today, and I want to point your eyes down here to the volume. We continue to see decreasing volume in this market, and that's exactly what a low volume melt up looks like. What causes these melt up rallies is the fact that there's absolutely no sellers anywhere to be found. Remember that the stock market is controlled by big money, and if big money wants the market to go higher, then they're not going to be selling, which is going to be very difficult for the market to go lower. It takes a lot of big volume sellers to get the market to go lower because most retailers are usually bullish. I could easily prove this point to you very quickly with the Bear Bull survey, which shows that the retailers are almost at 57% bullish. Remember the old Warren Buffett quote, "Be fearful when everybody else is greedy, and be greedy when everybody else is fearful." We're definitely getting to that greed and euphoric state in this market, and it's just in time for the end of a possible critical market cycle. So be very disciplined, and if you're trading this market long, that's absolutely fine because we are still definitely in a bull market. Just make sure you're controlling your risk, have tight stops where there's very critical levels, and understand your trading strategy. If you're trading this market to the long side, you're on the right side of the trade. The price action is bullish and the trend is bullish. I just want you to understand that the risk is that the higher we go, the more likely eventually we will see a big wave of sellers, and remember the stock market takes the stairs up and the elevator down. We have this huge gap open on the SPY ETF down here around $400, and we have a much smaller gap down around $398. Those are going to be your risk-defined levels, and if you're thinking about going long at these levels, the price target above is about $410. So there is definitely more risk than there is reward to the long trade, and that's why you would want to set a very tight stop loss or at least understand your risk-reward ratios. So the upside price target is still $410, and we do have gaps below that we need to pay attention to, and the top of that gap could be support around 403. The gap fill is $400.60, and then the next support level is right around 398. The 20 simple moving average is now going to be right around 397. You can see we're trading near the upper Bollinger Band, and we're definitely looking a little bit parabolic. Remember that I'm not in the business of calling a top, and I don't want to convert you into a bear when we're in a bull market. We have a bullish trend with bullish price action. Just please understand your risk. And I like to tell my Discord members to have at least 50% cash at these levels. Take a percentage of your portfolio and continue to trade with it, but leave the rest in cash until we get more clarity on what's going to happen with these gaps below. Remember that gaps typically get filled, and from today's close to fill that gap, that is about a 2% drop. So understand your risk to the downside and continue to enjoy trading and just trade responsibly. On the triple Qs, we gapped up today. What a surprise, going up over 1% and getting very close to looking like we're going to start breaking out to new all-time highs. Remember that 334 level was very critical, and we did close over that level today. That is a very bullish breakthrough for the bulls because that level was a very strong resistance, and the bulls basically cheated a little bit by gapping over that resistance level. So the bears never even got a chance to defend themselves at that level because the market gapped up over it. That is a very bullish sign, and it says that the bulls want to bring this market higher. However, I want to point your eyes to the volume yet again, and you can see that we had another day of decreasing volume. That's a sign that there's no sellers anywhere to be found, and when those sellers finally do show up, expect to see some of these gaps to the downside filled. So your downside risk is going to be the gaps at 332.50, 325, and 321. There's another gap down here around 315, but I'm not expecting to see that gap get filled. The most likely scenarios to the downside is filling the gap at 332.50 and possibly finding support right around 328. In the event that we see drastic selling, all of these gaps could very easily get filled, but we're still in a bull market with bullish price action and a bullish trend. Remember the 20 simple moving average just crossed back above the 50 EMA 2 days ago, and we're now in this full bull market where we're forming daily higher highs with bullish price action and a bullish trend. The upside price targets for the triple Qs are the previous all-time high at 336, and a break and close over that means we could be heading to the next price target at 341. Downside support levels are these gap fills at 332.50, 328, and 324. The 20 simple moving average on the triple Qs is now down around $320. Also take note that the triple Qs did close back above the upper Bollinger Band today, so that does mean we could see some selling or some sideways action going into tomorrow's trading session. You can see this move has been very parabolic and the 5 EMA is practically going up in a straight line with no sign of cooling off. This is usually not sustainable and eventually we will see sellers step in. It's just a matter of when, not if. On the Dow Jones, we went up about 0.25% today and we did find support at the top of that gap today right around 333.40. We did close back over the 5 EMA and we maintain in a very strong bullish trend. The price target on the Dow Jones is up here at 336 and it looks like we're well on our way to getting up to that level. Again, all of these price targets could trigger corrections, so understand your downside risk. The gap fill is right around 331.75 and the 20 simple moving average is now right around 330. That's also where our support level is, so the Dow Jones has a good amount of support below it and it's very likely going to get to that new all-time high. On the Russell 2000, we went up about 0.85% today, but we still have no defined trend. The trend is still choppy and going sideways, and we got another price action close below the 20 simple moving average. Upside resistance is going to be 224, 227, and 233. Downside support is going to be the 50 EMA still, which is now right around 219. If we break below the 50 EMA, the Russell 2000 will be going into a bear market, and we're likely going to retest the support trend line right around 205. There's one support level on the way there, which is right around 210. Remember, there's no defined trend on the Russell 2000, so if you're trading it, just make sure that you're not getting too bearish or too bullish because it is going to be a choppy market. On the Arkk ETF, we finally saw a green day going up 2.75% today. We still haven't retested the 50 EMA, so that level is still going to be resistance at 126.50. Downside support is going to be the 20 simple moving average at 121, the gap fill at 115, and the support trend line down around 111. There's no bullish trend, but Arkk is closing back above the 20 simple moving average today. So we need to see Arkk get back above the 50 EMA for a couple days in a row and start regaining some of that bullish momentum before we get too bullish on Arkk. On the VIX, which is our fear indicator, we dropped a little bit more today and we see the VIX closing at 17. Remember, the lower the VIX goes, that means there's less fear and it increases the probability that we're going to new all-time highs. So this low VIX continues to predict that the S&P 500 is going to continue to go higher and close at new all-time highs. We're very likely going to see SPY levels of 410 before we see volatility coming back into this market. So watch the VIX very closely because if it does start to spike and getting back into the 20s, that'll tell us that a possible stock market correction could be coming. But as long as the VIX is staying below 18, this is a low fear environment and it does favor the bulls to continue to grind this market higher to all-time highs. On gold, we're getting very close to our price target, which is our resistance level at the 50 EMA at 1761. If we break that resistance level, we could go to the next price target at 1776. On silver, we're getting very close to retesting the 50 EMA, which is also our price target at 2570. A break and close over that level could bring us up to our next price target at 2656. On Bitcoin, we are seeing a little bit of a rally today off of that support level right around $55,000. Bitcoin is currently up over 3% and it's back above all of the moving averages. You can see Bitcoin is still in a consolidation wedge and it needs to get a daily higher high breakout above 59,000 to go back into a bull market. It still has a bullish trend and the price action is trying to stay bullish, getting back above those moving averages. A break and close below support and below the wedge is going to retest the 50 EMA, which is going to be somewhere around $54,000. If we close below the 50 EMA, that's where the big correction could come and we could see Bitcoin dropping 20 to 50%. Remember, I'm not bullish on Bitcoin because I don't think there's enough upside reward for the huge potential downside risk. On Amazon, we went up 0.61% today, and Amazon just continues to blast through price target after price target. We see Amazon closing above that price target at $32.97 today, which means it could be well on its way to the next price target, which is our resistance trend line right around $33.80. You can see Amazon did close outside the upper Bollinger Band and it's basically going up in a parabolic straight line, which means it could be due for a retracement or a sideways movement to consolidate some of its recent gains. Downside support is going to be $32.97 and the support trend line, which is right around $32.70. If we break back within the wedge, we could be going back down to support at $32.22. On Tesla, we went up 1.91% today, but we continue to struggle to break through that 50 EMA, which is right around $689. If we can break back above the 50 EMA, we still need to break back above 718 and form a daily higher high to get this market going back into a bull trend. Tesla is slowly but surely developing some bullish energy below the 50 EMA, but this could very easily backfire and go back into a bear trend if we keep getting rejected at this level. So Tesla bulls need to prove that they want Tesla to go higher, and they need to get Tesla back over these $700 levels. Downside support is going to be $667 and our support line down around $618. On Apple, we went up 1.92% today, blasting right through that price target at $130. The next price target is up here at $132, and that is the gap close above. We do have a gap that opened today because this market loves making gaps, and that gap won't close until Apple gets back to 128. So right now, Apple's in a battle between the gaps, and it's a battle of what's going to fill first, 128 or 132. We did close well over the upper Bollinger Band today, but those will continue to expand. Downside support levels are going to be 130, the gap fill at 128, and we will have support at the previous price target around 127. You could see we're going back into a bull trend slowly but surely, and Apple is a market moving stock, which could bring the rest of the market higher with it. On the financial sector, we were pretty flat for the day, still maintaining bullish price action with a bullish trend. On the industrials, we close up about 0.25% higher, still closing over top of the 5 EMA and still maintaining a bullish trend. On the energy sector, we dropped 1.30% today, and we're getting very close to retesting that 50 EMA as support. There's no defined trend, and the energy sector is just chopping around. On the healthcare sector, we went up 0.15% today, closing over top of the 5 EMA and still maintaining a bullish trend. So going back to the S&P 500, you can still see that we have a lot of bullish indications across the board. All of the sectors are still looking really good, except for the energy sector, which has the least amount of weight. Apple is that market moving stock, and it looks like it's going back into a bull market, and we still see the VIX at very low levels. However, that doesn't mean this market goes without risk, because we do still have a lot of gaps below, and gaps typically get filled. So understand your risk to the downside, and always remember that if you're getting FOMO, you don't want to be part of the majority. I'll give you a quick reminder that the majority is still bullish on this market as we continue to break out to new all-time highs. Eventually, this greed will get punished. It's not a matter of if, it's a matter of when. So I'm not trying to scare you out of this market by any means, because it is still definitely a bull market. I just want to make sure that you're prepared and that you have an exit strategy in the event that we do see massive selling. I would hate to see you getting overextended with call options at these very high elevated levels and completely losing a large portion of your portfolio. Remember that I'm giving intraday updates on the stock market in the Stocks Channel Discord, and I'm bringing new trade ideas to you weekly. If you're interested in the Stocks Channel trading community, you can find out how to join the Discord server by clicking on the link in the description of the video. So next up, let's check in on our trade idea, which is still Shopify. And we saw Shopify going on a face-melting rally today, going up 5.45% and blasting through that price target that we had at $1,204. We are well on our way towards the next price target at $1,261, and we did get a price action close back above the 50 EMA today. We're slowly developing some bullish trending, and remember back when I said that Shopify could have been the best buying opportunity down at $10.35, and now you're really starting to see that patience paying off. We're blasting through price target after price target, and we're building up momentum, getting ready to head even higher. We have that last price target way up there at $13.16, and it looks like we should be getting up there in the very near future. We did see a huge increase of volume today, and we're definitely seeing some buyers stepping into this trade idea, and we now have support below at $12.03 and the 50 EMA at $11.70. So this trade idea is playing out very well, and we'll continue to cover it until all of these price targets are met. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.